Hey, welcome back to Everything Money. In this video, you will learn about Micron. This is Mohnish Pabrai's, one of his top holdings. We'll talk all about it. We'll show you the financials behind Micron and use our stock analyzer tool in our amazing Everything Money software. If you're looking to trade Micron at a quicker pace, Mo will show you the charts and trends so you can trade this in our Bid and Ask Nation, our community. But first, why should you watch this video? I bring your questions about Micron to a couple guys that own and operate over $100 million in real estate, stocks, and multiple businesses, and they'll give us a mindset and walk us through the process whether we should be buying or avoiding this company. Paul, Mo, welcome in, boys.
Thank you, Seth. And I don't know how we're going to do this, but follow us on Instagram, wherever it is, Everything Money Investing, and then follow our personal accounts. So let's talk about Micron. Micron's up a lot today. It's up 10% today. They had big earnings, right?
Yep. Yeah, big earnings. They rose yesterday. They're doing well today. People are very excited about this, Paul. We mentioned, we spoke to Mohnish Pabrai in Austin. The interview's out, guys, if you haven't seen it. And Pabrai is a huge fan of Micron, Paul. It's one of his only three holdings in his investment at the moment, and he's adding more. And a lot of our favorites also have Micron in their account. So it's
what fund is that? What fund is that in? Because I thought his right hand man told us that they have like 10 holdings.
Yeah, you're right. Now, this is third quarter. So maybe this is after they've reduced down. He's been in love with the Seritage growth properties for a long time now. And of course, he reduced Alibaba. So I think as you follow along in the interview, guys, I think you'll see that he is in love with Tencent. I wouldn't be surprised if Tencent is on his holdings moving forward for this last quarter. Yeah.
That's one portfolio. Because look, it says 190 million in value. They manage about $750 million in value. That's what they told us 2 weeks ago.
Okay. Anyway, keep going on Micron.
Last week. All right. So Micron, we've talked about this company before in the past. So let's just get right to the 8 pillars. Go to the exclusive software that we have. Seth, are you sharing it?
Yep. Go ahead.
Perfect. All right. Let's go Micron Technologies. Now, what is the affiliation with Micron and the new strain of the COVID virus?
They're sister strains, sister companies.
Okay, so you're telling me Micron Technology created the Omicron?
Micron actually, their earnings jumped because they actually created Omicron, and now it's what it is.
Okay. Allegedly so speaking.
Fast, that's why it's up 10%.
Okay, great. Too soon? Okay, keep going, Paul.
All right, so $100 billion company. Let's see if I can make this just a smidge bigger. Yeah, just a smidge. $100 billion company. Our first pillar, we want under a 22.5 5-year PE. It's currently 14.9. Wow, that's pretty low. Wow.
Yeah, that's great. Pillar number 1.
Yeah. Pillar number 2, we want a 5-year return on invested capital greater than 9%. It's 7.2. Not great, but still pretty solid. Pillar number 3, revenue growth. So we're going to the income statement of our exclusive software. 5 years ago, 20.3 billion. Last year, 27.7. Now, Seth, look at this. We go from 8, 9, 16, 16.2, 12.4, 20.3, 30.4, 23.4, 21. I mean, this is all over the board in terms of revenue.
Yeah.
Why is that? Let me go to the cash flow statement and you see they sold anything. No, they didn't even buy anything.
No acquisitions or dispositions.
That's weird.
Yep.
So guys, first thing I want to know as an investor is how does such an established company have such big fluctuations in revenue? I don't know. All right, pillar number 4, we want net income growth over the last 5 years. So I scroll down a little bit further, 5.09 to 5.86. And again, look at these jumps. 5.09, 14.1, 6.3, 2.7, 5.86. All right, you got to understand why these jumps are happening. These are immediately going, what is going on here? But again, It's okay as long as we understand a pattern as to why that is happening. All right, pillar number 5, we want shares outstanding decreasing because we don't want the company diluting our ownership. We want to own more and more of the business and not own less and less of the business by keeping our shares. So 5 years ago, we scrolled to the bottom of the income statement on our exclusive software. They had 1.11 and now they have 1.12, barely higher. So it's still an X, but not by much. Pillar number 6, Sethi, we like our debt to be low.
Yep.
Right?
Yeah.
So what we do is we go back to the main page of our exclusive software. We go to the 5-year average free cash flow, 3.57. And we're going to multiply that by 5. That equates to roughly $17.8 billion right here. So we want their long-term liabilities to be under 17.8. So we go to the balance sheet in our exclusive software, scroll all the way to the bottom, 8.49, less than half. So they can pay off their debts very quickly, right?
Mm-hmm.
So I'm initially looking at this going, okay, we have the cash flow metrics to look at now, but Pabrai really, really loves this stock. So why does he really love this stock? Anybody have any input?
No.
Well, what do you think?
I have no idea.
Mo's like, no.
I mean, I look at I really don't. This to me is like when Buffett bought Verizon. I don't know what he sees. Buffett loves Verizon. I don't know what he sees.
Should we get this free cash flow, Paul?
Yeah, let's go to the free cash flow statement on our exclusive software. Guys, now free cash flow, as a reminder, is cash from operations less your capital expenditures. You can do one of 5 things with that. Pay dividends, buy back shares, pay down debt, make acquisitions, and invest back in yourself. So we added to our exclusive software this line that gives you the actual free cash flow without you having to do the math. We go back 5 years, and it was 3.42. And last year was 2.44. Look at the previous year.
Yeah, this is choppy.
Million.
What is going on? It's choppy up and down.
I don't get this.
So I'm looking at like revenue right now, and if I'm just looking at it in 5-year blocks, 2012 through 2016, the revenue did increase. Then if you look from 2016 to basically call it 2021, it did increase. Maybe he's seeing and saying, okay, I really understand this business. They over a long period of time, they are going to increase. It's going to be a wavy ride. But maybe he looks at it that way. Maybe he really, we know that Pabrai really does he's very concentrated in his investment. So maybe this is one of those ones where he studies the hell out of it and understands exactly why there are these fluctuations and goes with it that way.
And their debt levels are pretty reasonable. They don't have a lot of debt. Their average 5-year free cash flow is 3.57. So they can pay off their debt in 2.5 years or so. So I don't know. That's it. But either way, their free cash flow is not increasing. It went from 3.42 to 2.44. And our final pillar, we take the 5-year average free cash flow. We multiply that by 20 to get a market cap of where we want to kind of look at. And 3.57 times 20 is a little over 70 billion. But if you remember, market cap was 100 billion. So that's an X there too. So let's go look at this 8 pillars tab. This is pretty ugly.
Yes.
I'm perplexed. I am really, really perplexed. Not even a high return on invested capital in the last 5 years. The debt is low and the 5-year PE is low. So like you said, Mo, maybe he just looks at it as a total of 5 years, but the 5-year free cash flow is not good.
I know. The one thing that throws off my thesis is the cash flow.
All right, let's go to Stock Analyzer tool. Everyone's watching, guys. This Stock Analyzer tool is one of the best parts of our software. It's been one of the most popular. This will allow us to make assumptions about the future and determine what we pay for a stock today. And maybe there's something that Pabrai sees or somebody sees out there in the long term, like you said, Mo, of the company. So let's do years of analysis. Let's pick 10. Let's go low, middle, and high. So look at these revenue growth numbers over the last 10 years. And that's with no acquisitions.
Yeah, I know.
So I kind of like that a lot. Guys, you remember we looked at the cash flow statement and there were no acquisitions or dispositions basically in the last 10 years. So I'm going to be conservative and I'm going to go 4, 6, and 8% revenue growth. Profit margin, 20, 21, 22. Look at that free cash flow. It's so low. Man, what are they doing? Let me go back to their free cash flow statement. Let me go back to it. I want to sit there and see. This is, was it MU?
Yeah.
Oh, there we go. Let's go to their cash flow statement. Their capital expenditures. Boy, that's a lot of capital expenditure. Have they been investing? They must have been, you know what? So something I want to look at, guys. So look at how free cash flow decreased big time. Because of look at their capital expenditures in the first half of this decade, in the first 6 years of this decade, and look at it now. It doubled.
Yeah.
So maybe they're spending a lot of money on new factories. This is something to look at because this could be Monish's theory right here that they're spending a lot of they're doing a lot in capital expenditures now for the future, and that would also explain the difference between earnings and free cash flow. Let's do a quick little scuttlebutt research. Micron Technology CapEx expenditures. Mo, do you want to check out their Oh yeah.
What's going up,
that.
Paul? Yeah.
Yeah.
And if you actually, so let's go back to and let's look. So that started in really 2018, that big jump, and I'm over here. That's when they got a new CEO. So maybe that guy changed their ways. And that's really what they hired him to do, is really make that push into building their business.
Well, let's look at their capital expenditure plan. Maybe you're right, Mo. That's probably it.
Yeah, I mean that date of May 8th, 2017. Ooh. I mean, I don't think that's a coincidence.
Micron promises $150 billion of spending on plants and R&D. Wow.
Would you look at that?
So guys, the play here might be it's a temporary hit to capital expenditures and it'll also be a future hit to earnings. But when earnings are hit, capital expenditures will be a lot higher because they've already paid all those capital expenditures off. So let's say they double their capital expenditures. You can add $5 billion maybe a year to their free cash flow number average, and it becomes $8.5 billion on average. At $8.5 billion, $100 billion market cap is only 12 times free cash flow. And for a company like Micron, that might be okay. So let's go back to our stock analyzer tool. I'm going to provide them with, still do this, but I'm going to give them a higher multiple. I'm going to give them a higher multiple of free cash flow with the lower, let's go with 25, 28, 31. And guys, like usual, 12.5% desired return because you can invest in an ETF and get 9 or 10%. So in order to buy an individual company and provide some margin of safety, do 12.5%. Analyze button. Okay. All right.
Not bad.
Well, before this big jump today, it had been right in our middle wheelhouse here. And again, that's only assuming 6% revenue growth, which isn't a huge number, guys. So this is probably what he sees. How's the chart of this company? Let's see how it's been doing.
It's incredible. I mean, I think since like October or November, it's up from $63 to
my God,
$65 to $90 since October 12th.
Holy cow!
Yeah.
So that was probably the thesis there. He probably bought a lot, going, hey, at $66 a share, this company is at that time was probably $70 billion, and he thought he was buying 11 or 12 billion a year in future cash flows.
So I could be incorrect about this, but I think he's held this for a very long time.
How long is a very long time?
Not 3 months. Because I think I started looking into Pabrai's holdings a year ago, and I think he held this.
Seth.
I'm looking here.
Look at my chart. Look at it.
Can we add this? It's the Seth and Paul favorites, the top 10 favorites. Boom, baby.
So guys, why is it Seth and Paul favorite? Go look at every other video about tech. And one of the first things we do is we look back at 2000 and we look at the chart and see where the stock was in 2000. If I had told you in 2000 that this company that had just hit these huge numbers would be the same price 20 years later or lower, you'd have called me crazy. Now look at it. It's the same price. Now here's the crazy part. Last year, they had $27 billion in revenue. Let's see what they did in 1999.
Oh my God.
$2.5 billion in revenue. 10 times larger. And the stock is flat. So if I told you in 1999 that the company would be doing 10 times more revenue in 20 years, where would you have seen the stock price go? I'm going to be the jerk who says this. If this doesn't cause you to go, and wonder why, you're probably going to have less money than you should in life. And that's fine. Leave the money to me. I just look at this going, this is exact prime example of how overhype and overvaluation causes problems no matter what happens to the fundamental business. If you buy the right business at the wrong price, it is still going to be a bad investment. That's all that matters is the price you pay. That's it.
Yeah, I love when you say that. If you guys are interested in getting this software behind Paul, this financial data, if you've been making decisions in the past and you felt alone and you felt on an island investing, you can join our Everything Money community, and Paul will show you right now.
So guys, we created this software because early on in the channel, our subscribers wanted to be able to analyze their own companies without having to wait for us to make videos. So we just merely made the software. Now, granted, it took hundreds of thousands, but it is now here. You can join it now. Here's what you get. You get everything you saw in the video we just did. You get everything in the mobile app. This is all mobile friendly. Carry anywhere you go. If you're on the bus, anywhere you can use it. You get 30 years of financial data. You get that stock analyzer tool, our most important aspect. You get exclusive daily content, between 1 and 3 videos every single day just from us, only for the users of our software. You get access to Seth Mo and I. You get all the future growth of the software too, which includes real estate calculators, stock screeners, and most importantly, what's active right now, you get access to our community of like-minded investors. So many people around the world are alone in how they think about investing. But in our community, over 6,000 people are talking every day in organized chats, talking about all of their favorite investments, why they look at them, why they don't. This includes crypto. This includes Tesla. We're not discriminating against only value. It's all types of investing, all available for you for only $1 per day. Less than a cup of coffee, $1 a day. Whatever price you sign up for today is locked in for the future. Sign up now. There are 2 ways to sign up, everythingmoney.com or Patreon. The benefit of everythingmoney.com is if you sign up right now, you get no sales tax for quite a while because we're not big enough yet. So as you saw, compared to our other competitors, we are vastly more cost effective, and you get just as much, you get more than you get from the competitors. So sign up now, everythingmoney.com, $1 per day.
And Paul is right. Not only can you sign up today, you get lock in that price, but this goes up every month. So those people paying $8 from last year are being joined today by all of our new subscribers who are currently paying $30 a month. So join today. Mo, let's head over to you and look at those beautiful charts for the people in the Bid and Ask Nation. What's going on with Micron on the charts?
So obviously Micron has gapped up bigly today.
Love that. Love the bigly.
With this wick, first of all, and with this kind of jump, this thing is going to pull back down. It's going to come right back down somewhere in this area of $84. Don't be fooled. So if you're in this, I know you're not seeing this today, but take profits on it. Not only that, look at this. We have this opening right here. The red line is not crossed over yellow. So this means that the trap door is open. Trap door means that there is a higher probability this thing continues in a downtrend, which it's technically in right now, and the red line starts continuing down here. Stock price falls back down, like I just said. So there's a high probability that this is going to happen. When you see jumps like this on a day of big exuberance, take profits on it. That's exactly what you need to do. Let it make that little pullback and then go ahead and swing trade it long. And if you want to day trade something like this, here's my TradingView day trading setup. Not using Street Smart Edge anymore. But with that said, look for these engulfing candlesticks that happen where you can get into them with good consistent volume and just run them up and just stay in them. As long as this red line is over 80%, you could stay in these things. Or when volume starts to fall off, you can hop out. But this is a great stock to make money on today. You could have made it in the morning. Guys, if you want to jump into the Bid and Ask Nation, come join me. You get the Trading 101 series, which is all of these rules that I can give you on. You get to learn them on a daily basis. You get the Employed Trader series, my Saturday weekend seminars every one Saturday per month, and the Discord community of 950 plus people. Come and join me.
We will keep you posted on Micron. Perhaps we missed the boat, Paul, when it was down 30% lower. But an interesting company, and obviously we will take a look at what Mohnish Pabrai does moving forward in this quarter. So we'll keep you posted. Thanks for watching the video. Fondle that thumbs up on the way down, and we'll see you next time, guys. Appreciate it.